Richard Harris and David Lennox are both joining us as well this morning. Richard, good morning. Let's get an assessment of the situation as it currently stands. No one was quite clearly able to direct to the way forward, given that there continues to be so much volatility. How are you assessing the situation?
Well, I think, the volatility is likely to continue. We saw some recovery yesterday because Monday was so bad, and that's not terribly unusual. I think today is going to be a very important day. I mean, Asia is showing markets down around 2%, something like that. If that happens, and if that's the same at the end of the day in New York, then I think we may well see more of a stability happening. If, for various reasons, the market sees fit to sell off more, and I think that's probably the more likely scenario at the moment, then I think we will see much lower prices. At the moment, I'm not massively concerned about that because, you have to look in view of the fact that last year many markets were up 20 or 30%. So we're only really losing a year's value. I think once we start going below those sort of levels, it becomes more serious. But today is going to be, I think, quite an important day to see whether the markets recover or not.
Let me bring you in as well, because everyone's anticipating some more pain, even if there is a bounce back later on, saying that this is a bear market reaction and not a structural need, structural longer term kind of correction. What would you make of it? And on oil in particular, given that we're not seeing any let up from either side, how much more pain could we see?
Look, certainly when you have a look at the oil markets, it was taken completely by surprise with the events that happened over the weekend. In fact, OPEC had been building up the rhetoric that we would see perhaps a 600,000 production cut come that particular meeting, and we got the reverse. So one would suspect that we're going to see, as already mentioned, volatility in the markets, because we have to see these two very big producers of oil actually now coming to some form of agreement. And at this point in time, one would have to suggest that it's going to take some political will to do that rather than perhaps market will. So we're watching very closely. We don't think that the OPEC members would especially want to see the oil prices down in these regions for any length of time, because you've got to remember they're single revenue countries, and from those oil revenues, they've got to balance their social budgets.
Sure. Richard, would you agree to that? Because, we already saw oil cracking that 30 mark. We're not seeing any let up, as I just mentioned, either. It doesn't look, at the moment at least, that they're too concerned about cracking that $30 mark in order to gain market share.
Well, I think that the oil issue is something, it's one of these events that's been overloaded on a whole bunch of other events. I don't think the oil situation is necessarily as critical as people think. I mean, normally, of course, lower oil prices are good for many markets, including India. And I think, basically what David was saying, I agree with. The two parties are having a little tiff between themselves. They have to resolve it. They have to move oil prices up. The arguments that they're having, I mean, Russia's argument is it doesn't want to raise prices because it wants to hinder the development of U.S. shale oil. I mean, that's not sensible in terms of having a major argument between the two. The U.S. is fairly neutral on this. It's not necessarily going to be affected. So I think it's really both sides are at the moment shooting each other in the foot. So I see that it will be resolved. The oil price will move up, but it'll still remain in fairly low territories and positive for oil-using countries.
Japan announced stimulus yesterday. We've heard Trump address the payroll tax, trying to get ahead of the situation. Europe's become the epicenter of the coronavirus. How much more volatility or pain can you anticipate, given the bounce back that we had on, on the Dow, but also the kind of nosedive we're seeing on the futures currently?
Sorry, who is that for?
For you.
Sorry about that. Yes, I think the big issue looking much further out is the fact that the coronavirus is hindering economic development quite substantially. That is going to have big impact on earnings. I'm sure we are going to have a recession. If we don't, the figures will probably be manipulated, but I can't see any way that you can cut out such a large swathe of economic activity for 2, 3, 4 months and not have a recession. That's going to have impact on earnings. That's going to have impact on what markets think about valuations. So clearly, lower prices are justified. The only question is, are we going to get down to those lower levels in a panic, or are we going to see a more sensible and smooth move? The hot money probably must be still on a panic.
David, just a comment from you as well on how the looming situation on crude may impact what we see on growth, even if oil-producing countries are to benefit. The larger implications, of course, given, for instance, that Russia is already in the kind of state that it's in, that could also lead to further decline when it comes to growth in Russia itself. We had Jim Rogers on the channel just a few days ago saying he would buy because it's looking so bad in that particular market.
Oh, look, there's no doubt about it that oil-producing countries are going to be very pleased oil-consuming countries are going to be very pleased with the current oil price where it is. And that in itself will help to stimulate growth, because we will see, obviously, the cost of transport through many countries actually starting to decline. However, the overriding factor still is, and we've talked about it, and that is the coronavirus event. That's really what's been focusing markets' attentions on global growth. I think at this point in time, they'll be looking at what's happening in the oil market and thinking it may only be a 1 or 2 week or perhaps 3 week event. If it goes longer than that, yes, there will be benefits, and they won't really be looking at their estimates until we just see how entrenched this war between the Russians and the Saudis might become.
Thanks much, gentlemen, for joining in and sharing with us your outlook on crude oil prices as well as what's going on with the rest of the globe.